Friends, a very warm welcome to each and every one of you to this webinar on fine-tuning AML transaction monitoring organized by Fintelekt and the Asian Bankers Association. My name is Shirish Pathak. I believe most of you participating would know me by now, but for those of you who don't, I head Fintelekt Advisory Services and I will be the moderator for the session today. At the outset, let me thank the Asian Bankers Association for their ongoing support to make these webinars tremendously popular and well attended. The subject for today's webinar is indeed very significant, and I believe something that almost every bank would be grappling with. In fact, I would even go on to say that it is one of the critical components of the AML CFT framework within a bank, because the ability to efficiently and effectively identify, isolate, analyze, and report a suspicious transaction is at the heart of the AML framework, and this is really where the rubber hits the road. Now, most banks will already have a transaction monitoring system in place, but it is really how well it is tuned that will determine whether the bank is inundated with a large number of false positives or whether it is missing out on very important false negatives. In the last few months, because of the pandemic, there have been plenty of deviations in customer due diligence due to banks adopting non-face-to-face KYC and CDD measures. And at the same time, banks have also seen changes in customer behavior, which is finally reflected in transactions. There are also debates happening on whether changes should be made to transaction monitoring systems to factor this maybe temporary change in customer behavior, or whether this is just a diversion for the short term and things will go back to where they were earlier. Each argument obviously has merit. There is also a marked increase in cybercrime and online fraud since the pandemic started, and with more and more payments going digital, banks are worried about the source of funds flowing through their banks, as well as the intended use of these funds. So I'm happy that today we are able to provide insights from both a banker as well as a risk technology expert so that you can get a well-rounded perspective of this issue. The two presentations today will be followed by a Q&A session, and feel free to post questions using the Q&A button on your screen, not the chat screen, not the chat button. Our two speakers for today are Douglas WOLFSON, Director of Financial Crime Compliance, LexisNexis Risk Solutions, and ASSRANKHUUN, Group Head AML CFT Transactions Monitoring and Investigation Operations, AmBank Malaysia. Douglas will be making the first presentation, so before he starts, let me say a few words about him. So Douglas, as I mentioned, is Director of Financial Crime Compliance for LexisNexis Risk Solutions in Asia. He is based in Hong Kong and drives the strategy and product development of the leading risk tools used by the biggest banks in the world that help to mitigate financial crime compliance issues. He has over 18 years of financial services, risk management, and international business experience. His experience also includes leading risk management departments at the world's most recognizable financial institutions. Can we have Douglas's presentation now, please?
Thank you very much, and thank you all for joining me today on the Fine-Tuning AML Transaction Monitoring webinar. I am absolutely delighted to be here and delighted to be speaking to you from across APAC. I hope that everybody's well and everybody is managing this COVID crisis okay. Obviously, as part of COVID, there is a lot of financial criminality happening. A lot of payments that people are trying to hide amongst all the activity that's happening around COVID while everybody's at home. A lot of digital payments that people are trying to hide as part of all the digital payments that are happening out there because we're all stuck at home. And so what I want to talk to you today is how you should be thinking about your AML transaction monitoring, how you should be evolving your AML transaction monitoring, because in reality, over time, we are going to be seeing more and more digital transactions. I think people have seen the ease of use of digital economy, People have seen the ease of use of working from home. People have seen the ease of use of having things delivered to their door. And the likelihood is that we're not going to go back to as much of the bricks and mortar shopping that we did previously. The transactions that we have to go to a bank branch or a payment company to make those payments. And so we're going to be seeing more and more digital transactions, and it's important that you out there in the financial institution universe in Asia Pacific are looking more closely at your AML transaction monitoring. What I want to talk about to start is the 2019 LexisNexis Risk Solutions True Cost of Compliance Survey. We ran a survey as a company, and we talked about compliance issues, major compliance issues and major compliance costs in the region. And so I want to use that survey to drive the conversation more generally about the direction that we need to move in with transaction monitoring. I want to talk about the key challenges that are facing compliance departments and risk versus efficiency, which actually the two sort of go hand in glove. I'm going to talk about data protection and information security, about encryption and anonymization, and really what we see as the future of transaction monitoring. So to sort of start and set the scene, sort of start the conversation, I want to talk to you about the background and the objective of the True Cost of Compliance Survey, because I can understand if you're sitting there saying, well, you're from LexisNexis Risk Solutions, you ran a survey, so of course the survey is going to say what you want it to say. And I want to be very clear that the way that we ran it was through a third-party survey company. It was anonymized. Nobody knew who had sponsored the survey, what the purpose of the survey was, any of these things, because we truly want to understand the drivers and influencers of AML compliance. We want to understand the trends, especially around cost and especially about spending, and the direction that people are moving in terms of their technology and their human capital and the way that things are evolving. It's really important for us to get an honest opinion from the true compliance practitioners in the space, in the region, so that we can share that with you and you can understand that what we're coming up with isn't to pitch products, it's to better understand the marketplace, to better understand where we're coming from and what companies need moving forward. The methodology was, as I said, anonymized. Respondents were senior decision makers between the financial crime function, within the financial crime function, who oversee KYC, sanctions, or AML transaction monitoring within banks, investment firms, asset management firms, and money services bureaus, right? The key users in financial institutions of financial crime and the key decision makers of financial crime compliance within those institutions. They were not made aware that the survey was for LNRS, despite the fact that we sponsored it, and we received no company information from the respondents. We received nothing specific that would let us know who responded, and the survey was taken around Asia Pacific. So, if I can start with a key point that we were trying to understand, and I think for a lot of you out here in APAC, I think we are very open to change. We are very open to the digital world, to the digital space. And so we want to understand sort of the human capital piece versus the technology piece, because we're very comfortable with technology in the space, but also there are plenty of markets, countries, geographies where it's very easy just to throw more people at the problem and to try to solve the problem that way. I learned in my banking career that throwing people at a problem is not a long-term solution. Yes, you need staff and you need well-trained staff and you need the appropriate staff, but adding more people to solve a problem that technology can solve doesn't get you to where you need to be in the long term, because all of our goals in business, be it my business, a banking business, a money services business, is to grow the business further. And as you continue to grow a business, you have more people that you're onboarding, more customers that you're onboarding, and thus more transactions that you're seeing. And you can't just keep throwing people at those problems to try and investigate, any alerts, try to investigate any risk that you might have. So what is the split between labor and technology? Well, as you can see, and this is pretty much across the regions, labor is a bigger driver of cost than technology. And this is pretty obvious. I think people cost more per capita than technology, and so it's going to, there's going to be a bigger cost there. Now, I think what's really important and something that I want to share with you is that if we compare to the 2016 LNRS True Cost of Compliance Survey, in APAC, 81% of costs went to labor. So that's a significant reduction. That's a 27% reduction in the amount of money being spent on labor versus technology, which is a huge step in the right direction. Additionally, if we look at alert types and we look at the manual labor involved in those alert types, if we look at AML transaction monitoring, 8.25 hours to clear an alert. That's an incredible amount of time, on average across the region, to be spending per AML transaction monitoring alert. That's a huge amount of time. It's especially large when you consider that our respondents expect, 3 out of 4 respondents expect those alert volumes to increase and expect that the increase will be about 10%. Now, it says to increase in 2019. We did the survey at the beginning of 2019. We intended to do the survey at the beginning of 2020, but obviously because of COVID, our timings got pushed out a bit. So we are currently in the process of doing the 2020 survey, and we'll be able to see, if our respondents were correct in those numbers, but there's no doubt that the amount of alerts will increase and the amount of time to clear each alert is going to increase. Now, using people to clear those alerts, again, it adds a lot of cost without adding as much value as technology. And if we look at this is our respondents' view on technology's impact on compliance, right? If we look at the amount of positive impact that's had versus a negative impact by using more technology, the amount of positive impact on productivity, on customer acquisition, this is hugely, hugely valuable. The more technology that our respondents use, the more positive impact that they saw of that technology. Now, it is important to state at this point that obviously you need to be using good technology. You need to be using technology that improves your efficiency, that improves your workflow. Otherwise, it's not going to add significant value or any value for the cost. However, for the people who are using that technology and are using the correct technologies, you can see the ones that use more technology are seeing significantly more value than the ones who are using less technology. It improves job satisfaction, and if you think about the staff and the amount of menial work that they need to do to clear alerts, that's not fun work. Nobody enjoys doing that. I've had to clear alerts. People who have heard me speak before about alerts have heard about stacks of paper put on my desk asking me to approve an alert by looking through stacks of paper. There's no added value to the manual labor there. And so companies that are using more technology are less concerned about the job satisfaction of their staff. Their staff is happier because their job is more efficient, the workflow is more efficient, their ability to do more meaningful work is greater. And that is really, really important when you're trying to retain staff, because in the compliance space today, there is so much competition for good staff. It is important to be able to hold on to the good staff that you have. And that's especially so in Asia Pacific, where we haven't been as focused on compliance as long. And so we're still bringing up a lot of those compliance staffers and teaching them. And you don't want to spend all of that time and effort to train somebody only to have them be frustrated with their job because there's so much manual labor that they leave. So this is a really important aspect that often gets overlooked. One of the hidden costs of compliance in the manual labor that people have to do. Finally, what we found across Asia Pacific, and this is really the most important thing that we can talk about, having more technology can improve the bottom line. Now, excuse me. People ask a lot about this slide. What does this mean? How is it that as your total cost goes up, you're somehow being, and your spend goes up, you're being more efficient? What this means is that you can get a lot more done. Your cost of your entire compliance program per person, per compliance officer is reducing. What that means is that you're employing more efficiency in your process, more economies of scale, because you're using more technology. Your compliance officers are able to achieve more. They're able to go through more transactions. They're able to go through more alerts because you are using more technology. It's that much more efficient. And I think it really drives the point home, and it's sort of the final point on this, but it drives the point home that it is essential to use more technology in this space. It's absolutely invaluable and will reduce the cost across your entire program and will allow you to be more efficient if you're using more technology instead of just going out and hiring handfuls of people. Now, if we look at that risk versus efficiency, right? Because that risk, that's the risk of you're allowing money laundering to happen, that risky transactions are getting through and people don't see them. What's really important when you look to implement more efficiency is that you do it on a risk-based approach. The first thing you have to do is an AML enterprise risk assessment. This allows you to understand the risks of your business, the risks of the transactions that your clients are undertaking, and how overall risky your business is. The second is to take a risk-based approach. Checkbox risk approaches simply don't work. And the reason for that is that the criminals know the checkboxes that you're trying to check. And so they know how to avoid them as well, how to tweak information in a transaction, how to use just the right amounts so that they can get around your approach, how to do it based on timing so they know when they catch you outside of the periods that you're potentially checking. And then finally, you need to do a technology assessment. You need to honestly assess whether the technology that you're currently using is the right technology, because you could be looking at millions to billions of transactions a year, and you need to make sure that your technology is well placed to be able to handle the amount of transactions that you are actually undertaking. Once you understand all of these business risks, once you've applied your risk-based approach, you need to be making constant analysis and improvement. This isn't sort of a set it and forget it type of thing. You need to be currently looking at the way it works, whether it's working, and whether improvements need to be made. This is similar to white box machine learning, and I know that that's a huge buzzword. Many of you have heard about it, but the way that white box machine learning works, and funnily enough, a lot of you might be using it in your transaction monitoring solutions. The way that it works is you allow for the machine to run its course, raise alerts, and then you go back into the algorithms and you say, these are the reasons why the alerts that it raised were correct. These are the reasons why the alerts were incorrect. They were false positives. And so it improves its thinking the next time around. The same thing has to be done for your program as a whole. You need to be constantly analyzing the way the program works, what's being done, and how you are improving it, how you can improve it. You need to use the best data and models to ensure that those alerts are only generated for real risk. And what that means really is that false positives are the scourge of the industry. If any of you have ever dealt with false positives, and I'm sure many of you have, you know how painful it is to go through them only to find out that the person you want to deal with is not a risky individual, or the transactions that are going through are not actually risky transactions. They're transactions related to people and companies that you want to be dealing with, but you have to spend time thinking that they're risky. And so you need the best data and the best models to reduce that. You need to be constantly refining those models to ensure that the false positives are reduced while the true positives are still captured. And you need to use machine learning and artificial intelligence where appropriate. And I just discussed sort of the machine learning model. This is really important. And it's really important to use the data analytics to determine which alerts your algorithms are raising that are appropriate and which ones are not, or false positives, so that you can tune your model to find more of the true positives and less of the false positives. And most importantly, you need to ensure that the workflow is efficient and appropriate for the business. We believe very strongly in STP, straight through processing, the systems speaking directly to each other, because that reduces manual work. And as we discussed in the first half of this presentation, reducing manual work is good for business and it's good for alert clearing alike. Data protection and information security. This is hugely important. And you know, all of us who work in businesses, all of us who deal with PII, we also on the flip side are consumers that have our data out there in the public. And so it's just as important to us that the data is protected as it is to our clients. And so it's really important when you look at all of the regional and global regulations that are out there. You know, we talk about GDPR, we talk about PDPO, we talk about PDPC really all the time here. But now we're also starting to talk about the PDPB, and all these acronyms are difficult to get out. But the PDPB, which is going to revolutionize the way that data is handled in India, and also the way that everybody who deals in India is going to be dealing with data. It has to be encrypted, it has to be anonymized, and this is really important for the region because in places unlike Hong Kong, unlike Singapore, that potentially don't yet have major personal data protection laws, they might start looking at India, which is going to the next level of stringency, and looking at how do we ensure that our data is protected, right? How do we ensure that our consumers are protected in information, right? And one of the key points and one of the key discussion points that is ongoing in the region, in India, it comes up a lot around this bill, but it goes on around the region because of it, is the right to be forgotten. And this was originally introduced in GDPR, and it's a really important discussion because the right to be forgotten is essential for us as individuals, for us as law-abiding individuals. However, if you're a criminal, you are going to choose to be forgotten after every single transaction that you do. There's no value in your information being retained because people then might realize that you're a criminal. And so the key discussions that we're having are around exemptions for the prevention and detection of unlawful activity, including fraud, money laundering, and counter financing of terrorism, which is our key area in which we're working, right? The ability to keep transaction data is essential if the purpose of it is to try to find fraud, try to find money laundering, try to find financing of terrorism. This is really important. And so as you're having locally discussions about privacy bills, about the right to be forgotten, remember that it's essential to have exemptions for financial crime, money laundering, fraud, terrorism, all of it. It's essential to include those provisions in the laws. So transaction monitoring now, and again, we looked at the RBI because the laws are changing in India, and there's a real focus on this space, but it's similar everywhere in the region. Banks have to set thresholds for large cash transactions, high account turnover, different categories of accounts have different limits. This is the same everywhere in the region, right? This is really key. All of these rules that exist it's really about static limits and making sure that you have limits in place. The problem with these limits is that transaction monitoring is post facto. So you're only you become threshold monitors instead of transaction monitors. And the risky transactions might get through because they might be below thresholds. And so you need to be aware of that. You know, you need to be aware of the fact that risk is happening below the thresholds that are being set. And so how do we see the future? You have a quote here again from the RBI. The banks can effectively control and reduce their risk only if they have an understanding of the normal and reasonable activity of their customer. This is the core to risk-based approach. Understanding what is normal and reasonable, and then trying to find the things that happen in the wings, happen outside of what is normal and reasonable risk. And so what's key for transaction monitoring and essential for transaction monitoring going, and please, if you bring anything with you today, bring this with you, is you need to be transaction monitoring on a behavioral basis. You need to be able to compare current versus previous behavior, compare current behavior versus expected behavior, and have the ability to find suspicious behavior based on suspicious payment patterns elsewhere in the network. You need to be able to review historical money laundering cases and look at your current risk based on that. It's not just about thresholds, it's about behavior and how people behave. So make sure as you're building your transaction monitoring models that you're looking not only at the thresholds. You have to set the thresholds because your regulators expect you to monitor thresholds. But if you want to find real risk, you have to monitor the transactions, not just the thresholds, to look for that risky behavior. I want to thank you very much for this time, and I know we'll be taking questions a little bit later. Thank you, and I look forward to any questions you might have.
Thank you, Doug, for that presentation. Before we move to the next presentation, we have a quick poll question, if I may request for that to be displayed. So you have about 30 seconds to answer this question. All right. Thanks for taking part in that poll. Our next speaker is ASSRANKHUUN. As I mentioned earlier in my opening remarks, he is Group Head AML CFT Transaction Monitoring and Investigation Operations at AmBank, based in Malaysia. Ashraf has over 20 years of experience in banking operations and compliance, with specialization in international trade finance and financial crime compliance. He is well experienced in managing relationships with all bank stakeholders and local and foreign regulators. Before AmBank, Ashraf has worked in JP Morgan and Citibank. Can we have Ashraf's presentation now, please?
Thank you, Suresh, for those kind words. And thank you as well to all the participants that would have spent some time to participate in this program. I hope the session that we're going to go through for the next few hours will help us to reevaluate and work together in terms of looking into some of the challenges that we are foreseeing in handling transaction monitoring alerts, financial crimes issues, and how do we fine tune to address what's important. So I'm going to be sharing with you some of the compliance challenges that we are seeing. First of all would be the regulatory changes and as well as the political uncertainties that's happening globally. Of course, the COVID-19 pandemic has also create resourcing issues, would also given us something to think about, when it comes to how do we manage transaction monitoring. So political issues and regulatory changes are a big item when it comes to how we look into things, right? Next is the ever increasing new trends that we are seeing. These are one of the other external factors that we need to really consider, because in the ever changing world of addressing money laundering and financial crimes risk, the complexity of how money is being laundered become very complex and very dynamic, and we as the unit in compliance should be able to look into all these changes and keep up with the new trends arising. Inadequate staff training. Most of the function I've experienced working with local and global banks. When it comes to staff training, we are only looking into some standard trainings when it comes to AML function. There is not enough training that we provided to look into what's the uptrend when it comes to addressing money laundering and financial crime risk. Okay, so those are the challenges that we need to look into and address as soon as possible to allow better management of financial crime and transaction monitoring function. Next is to look into continuous risk assessment. I've seen organizations that are not really putting into much interest when it comes to re-evaluating the risk assessment or the kind of risk that the organization exposed into. So these are the areas that probably the bank could or institution could invest more. All things technology. So these are the tagline, most commonly being used. It is some sort of what people believe to be the solution for everything that's happening. All right. But I guess to allow technology to work as how they should work, we need to be able to assess what needs to be done. Working with fintech, working with a new startup company is also an option for us to look into. However, it is also important for us to assess the risk and exposed to a respective organization. Okay, so these are some of the elements that I would suggest when it comes to re-evaluating what's happening in the respective organization. I would call it, an item to look for. What to look for before we started to do reassessment, evaluation, putting into mitigation action plan, before we implement certain action plan that we have, set the organization to do. All right. The first one would be, reassessing the internal audit findings, recommendation from the regulator. Those would be a good indicator as to where to start. Okay. The other areas that we can look into is to study historical trends. Most of the organization, when it comes to studying historical trends, tend to look only into what have gone wrong. They should also be able to look into what have gone right, because that will help you to assess where do we as an organization put in resources deployment, put in our investment. It could be from a technology perspective, it could be from a people perspective, that would allow you to not spend too much on unnecessary areas. The third one would be to look into emerging threats. What I mean by this is to look into the external factors that would put an organization into, uncomfortable position of dealing with AML threats or financial crime threats. So they must be able to assess, peers to peers comparison, what's happening with other organizations, what's happening in other industries. We've heard about what happened in, Wirecards, for example. What do we learn from them? Some other banks that are being fined on, regulatory issues, AML issues. What do we learn from them, and how do we improve, the way we put in controls? Okay. So the next slide, I'm going to talk about opportunities. This is where normally when it comes to transaction monitoring function, right, we would look into three main pillars. Okay. I have three main pillars where I would focus on in terms of, refining transaction monitoring. Let's relook into how we build the human capital, providing educate and update training strategy. All right, we should be able to understand what kind of training do we give to our people, understanding the threats that's happening. What is the latest typologies that we are seeing across the board? These are information that is required to allow the analysts, when they are looking into transaction monitoring, address the risk pattern. Right. Number two, in building human capital, would be knowledge sharing among industries. Similarly, like what I've told, we have to learn from our industry's player. What are the threats that's happening in other part of the countries? What are the new threats? Like, we are talking about clone scam. We are talking about scams. Cyber security. Love scam, for example, fraud. Right. Number three, most important, and most of the time being neglected by organization, is to develop future talent. Most of the organization that I've spoken to, they invest very little in terms of developing future talent. We have to remember these are the area that we need to put emphasis, because they are going to be those talent that retain the sustainability in terms of what we have built. So it is important for us to look into the investment in future talent. Next, in terms of process re-engineering, I've got 4 items there. I believe some organizations would have more, but these are some of the areas I would suggest. Looking into refining the inheritance process, looking into the control gaps. This can be done by re-evaluating the existing control, whether or not it is sufficient to detect, to address AML and transaction monitoring, AML and terrorist financing risk. By doing that, it would help you to come up with better process and more effective and efficient. Secondly, looking into classification and prioritization of alerts with higher risk. Because most of organizations, they tend to look cases by cases, alert by alert, without knowing which one has a higher risk weightage, right? And because of that, we tend to lose on the importance of addressing big ticket item. So, reclassification on prioritization of higher risk alert would help to address cases with bigger risk. Robotic process automation is something that, a lot of organizations speak about AI and machine learning without actually understanding what AI and machine learning. To do AI and machine learning, you must have good data capability. Those are areas that can be explored, but in terms of processes, I would suggest for us to look into automation and make it robotic, right? This would help tremendously with the manual processes that traditionally being used to address alerts triggered in our organization. Number 4, collaboration between reporting institution and fintech companies. So this is crucial. This would help in terms of knowing best practices, how fintech can help organization to first address alerts that's being triggered, to understand whether or not the threshold tuning is in place, to understand whether or not the false positive that's continue to generate month on month, day on day is just noise or is the real threat to organization, right? So working with companies that would help look into false positive reporting, would definitely help in terms of fine-tuning your AML and CFT transaction monitoring function. So then the thirdly, and I believe would be the heart of the fine-tuning of AML transaction monitoring, is to look into technologies capabilities. And to begin with, I would start with re-looking at data. How do we utilize data and increase the technology's capabilities? These are big words, but actually we can slice and dice to look into what's important to every organization. Data is there in organization. Whether or not we have fully utilized all this data to allow us to look into genuine alert and false positive alert. This is something that an organization really needs to look into and invest tremendously. With that data and outcome of transaction, historical transaction monitoring outcome, it could also help to refine threshold and scenarios, right? And agreed, I would agree most of the threshold or scenarios that is currently in the market are rule-based. But is that enough? Right? I think the threshold should be refined into much more granular details to allow us to detect the real legitimate alerts or suspicious transaction. Again, I'm going to talk about reduced false positive. How would technology look into reducing false positive? Because as far as I understood, 90% of alerts being triggered, are actually false positive. So there are an average market studies that I can recall correctly. From the alerts generated, only anything between 4 to 8% resulted to an STR submission. I guess looking into reducing false positive will help tremendously in terms of getting into the real concern. Next is real-time alert triggers. I think this is something that we might be seeing in the future. At the moment, again, AML, it is based on pattern. It is based on rule-based. We have yet to see fintech, or we have yet to see, companies that could help the organization to detect real-time alert. Some call them predictive alert based on the transaction that's usually occurring in customer accounts. How would the account should behave, and when it changed, the alert would then be triggered. So, I think it is also important for us to look into opportunities to apply real-time alert triggers rather than, the traditional rule-based triggers. And the last and but not least, the expansion of coverage. Most organizations are still separating or focusing on money laundering and terrorist financing. I've yet to see, despite being called financial crime and compliance, I've yet to see an organization who truly live into the meaning of financial crimes and compliance. Because, and I would have to agree that it is a bit difficult, but there are opportunities for us to move beyond money laundering and terrorist financing. We should be able to look into how do we address fraud, together with money laundering and terrorist financing. We should be able to put in anti-bribery and corruption together. How does cybersecurity, market surveillance, insider trading to be addressed together with money laundering, to be addressed by compliance unit. Right? So these are the list of opportunities that I would suggest for every organization to invest, to look into, and probably start to apply. And I hope by applying all these steps, it could elevate the way we handle transaction monitoring in the future. Suresh, I guess that's all from me. I'm open up to here to any questions at the end of this session.
All right. Okay, I think that's about all the time we have today. We are already about 8 minutes over time, so let me close the session. Douglas and ASYRAF, thank you so much for joining here and for those wonderful presentations and for taking the time to answer all the questions. We did have many more questions, and we will try and send them across to you in case you want to respond to people personally. That would be great.
Yes, happy to.
Also, great. Also, thanks to all the 800 plus people who registered for today's webinar from more than 30 countries across Asia. A large part of them were also able to actually get on and attend the entire session. A big thank you to our partners, Asian Bankers Association, especially Ernest, Amador, and Mig, for working together with Fintelekt for this webinar, and so many others that we've done in the past and hope to do in future. So we look forward to seeing all of you again at the next Fintelekt ABA webinar, which is on the subject of optimizing AML screening next month on the 9th of September. I believe we'll have Doug back there again for that. So we'll wait for his presentation on that topic for next month. With that, let me close today's webinar. Have a great day ahead and look forward to seeing you at the next webinar again.
Thank you. Thank you, Suresh. Doug.
Thank you very much.
Sure. Bye, Doug.
Bye.